And we're going to talk recruitment now, because the quarterly Bait.com Jobs Index released recently shows that 50% of companies in the MENA region are more likely to recruit staff over the next 3 months. And to discuss the improving sentiment in the jobs market, we're pleased to have in the studio a representative from either side of the recruitment industry, from the traditional side and also from the online side. First, from the authors of the new report, Faisal Bashir, the business manager at Bait.com, and from the traditional recruitment side, Toby Simpson, managing director of Gulf Recruitment Group. Good morning, gentlemen. Thanks for joining us.
Good morning, Malcolm.
Good morning.
We'll start with the Bait survey, please, Faisal. Talk us through the key findings of this, because it was quite an interesting one, and it, in many ways, raised a few eyebrows.
So, Malcolm, we've had some very positive news come out after this survey. About 55% odd are most likely to hire within the next 12 months. And what's really interesting is that we've had over 60% likely to hire within the next 3 months, generally coming out of Saudi Arabia, Qatar, and UAE, most likely to be hiring within the next 3 months. And, we've seen, and generally what they're going to be doing is hiring from the construction industry, banking and finance, IT, telecom, and so on.
You've just answered every single question I wanted to ask you over the next 20 minutes. So that's it. Goodbye. Thanks very much for coming. Toby, have you experienced a similar level of optimism in the market?
I've definitely experienced a lot of optimism. And things genuinely are getting better, but I'm cautiously optimistic. I've got to say, I'm going to pour cold water on things. Dubai is the UAE is a uniquely optimistic place. And I can't help remembering back to 2008, where we were in a very similar situation. The markets had started tanking. There was a global debt crisis, a maelstrom emerging around us. But Dubai and the UAE were still very optimistic, and things started to go horribly wrong. Now, I don't think we're in exactly the same situation now. I think there's real cause for optimism, particularly around government spending and infrastructure around the GCC, but you've got to recognise that there are problems from the outside world that will affect us in the near term in this market.
When you look at the infrastructure projects that you mentioned, Toby, what kind of jobs and sectors are hot and looking at roles at the moment? Because I would imagine there's a real shift in trends from previous sectors that would have been popular in 2008 to what's actually popular now and where the jobs are.
Absolutely. Well, the great thing about infrastructure spending is it doesn't impact just the construction firms or just infrastructure developers. But as soon as the roads and bridges and ports get built, then all of a sudden you have hospitals and schools and all the companies that service those hospitals and schools. So it actually has very wide-reaching impact on on the economy in general. And for example, Saudi is due to spend 385 billion over the next 3 years, I believe it is, or 5 years. Don't quote me on that. Oman similar with 100 million. Trends are likely to be strong across a broad range of service sectors here in the UAE. We'll feel the impact of spending all around the Gulf. I don't think there'll be too many losers. I'm slightly cautious about hospitality and retail.
Faisal, Toby mentioned Saudi, you mentioned Saudi Arabia, and you've both mentioned the big infrastructure spending that's going on in that particular market. How much has the Arab Spring had an effect on this as well? The simple fact that, of course, with unrest in North African countries, a lot of people have actually decided, yes, maybe a move to the Gulf is the right time, that suddenly there's an awful lot of people looking for jobs at probably reasonable wages.
It's a great question. I think, when times are turbulent, people are looking for better options for themselves and for their families. And I think what the Middle East or what Gulf gives you is a safe haven. Gives you something with more stability, great corporate lifestyle, a great place to earn some bread. But you'd be surprised that if you look at the survey, about 62% of employers are going to be hiring in Egypt, which has had a very public show of dissatisfaction very recently. So, I think unrest can be a good or bad thing. In a way, unrest, once it's over, can have a very, very major economic impact.
I've been doing the Business Breakfast now for enough years to be a little bit sceptical about surveys that use percentages a lot. What was your methodology for the survey, and what were the absolute numbers? How many people did you talk to?
So we took about 4,560 employers, and no job seekers, just pure employers, and we asked them around, a bunch of questions, around how are you going to hire, when are you going to hire, for how long are we looking at to hire, what industry, what sectors, what levels, what functions, and so on.
And across what region?
So we did the basic MENA region, MENA and Levant. So looked at Egypt, Lebanon, Morocco,
and the GCC.
And the GCC.
Yep.
When you look at the survey, there was two figures that struck me. One was, or two statements about figures. One was that the amount of companies, there are companies that are looking at hiring, and then there are companies that are definitely hiring. Can you differentiate between those figures? Because there's one thing about looking to hire and actually hiring. It's a huge difference, especially in this market.
I think in Q4, a lot of the times people are actually gauging their performance for the past 3 quarters. So I think the pure difference between likely to hire and I am going to hire is, you want to, the companies that are going likely to hire really want to have a trained staff going into Q1 next year, ready for action. And I think the ones that are likely to hire just want to see their performance and see, we need to see what we're going to do.
But what percentage, how many companies said that they were definitely looking to hire this year?
I think it was about 23% said they're going to hire for sure this year.
And Toby, are you seeing similar sort of figures from the clients that you're talking to? What kind of sentiment are you seeing from employers for the rest of the year?
Fairly good sentiment, and we'll see how developments in the future affect that. And I think it is relatively sector specific. You have your defensive sectors such as healthcare, pharmaceuticals, FMCG. That demand will never go away. It's strong and will continue to be strong. And I think sentiment at the moment is genuinely good, and we'll see how that plays out over the next 12 months.
You've talked about construction. What about finance, banking jobs? So,
after construction, I think the next big industry to hire would be the banking and finance, and then the retail after that. I think there are a lot of positions coming up in banking in the next 3 months, as per the survey.
And what about yourself, Toby? You've seen a lot of banking and finance positions.
I think you've got to split out. Banking and finance is a multitude of sins, and I think you've got to split out what is the difference between retail and corporate banking, and the difference between investment banking and asset management, and insurance as well, in fact. There is a lot of liquidity at the moment, and banks are lending cheaply, to try and, I suppose the government is trying to get them to bolster the property market. But on the other side of things, you still have, and you have had since 2008, kind of anemic trading on the, both the Abu Dhabi and the Dubai exchanges. That really negatively affects the investment banks and the private equity firms. So I think you will continue to see strong growth, particularly around sales functions within corporate banking and credit risk functions within corporate banking. Within investment banking, things will get better, but at a much slower pace than the retail and corporate banking cousins.
With so many people looking for jobs, I'm guessing that salaries are going to be squeezed and significantly lower than they would have been 2 years ago, 3 years ago.
I'm not sure that's the case. One of the things that the market has really learnt since the beginning of the noughties, the 2000 to 2007, is that they really do have to hire talent, and you still pay a premium for the right people. Gone are the days of just bringing on anybody to fill bums on seats. Good employers have recognised that you need to pick up the best skills from within the GCC and from around the world. There probably will be some downward pressure. I expect the turbulence in the West to provide a lot more European and North American candidates to markets such as Dubai, Singapore, Hong Kong. But on the other side of it, the Indian market is doing exceptionally well, and Indian nationals no longer have to come to Dubai to gain a fantastic salary and a standard of life. So I think salaries will rise slowly, probably in line with inflation, somewhere between 3 and 4.5%.
Faisal, similar to your views, what you're experiencing?
What we're experiencing is if you look at the banking sector and if you go on to Bait.com, you'll notice there is a big influx and a large number of job postings on Bait.com from the banking sector, and there are a lot of positions and a lot of applications.
What about the salaries, though?
So, salaries for me, I think for the past 2 years it's been a bit slow. I think this year it will increase by about 6 to 7%. But there'll definitely be an increase because, like Toby said, you have to pay for talent.